We're almost live.
We're live.
We're live, I think. No, I think it might go a little bit longer. It'll go a little bit longer, and then
Oh,
I think we're live now. So it says we're alive.
okay. Looks like we're
So
live.
think so. So hey everyone, welcome to Night Live. I have a special guest. We have Hannah here from our investor relation team. She's a little bit nervous. First time that she's been online. It's been, we'll get into
It's
it.
an
And
understatement.
you're very, very nervous. I can tell by how fast you're talking, and I've said it's okay, and we're going to be good. So just waiting for everyone to tune in. If you're seeing this, smash up the like, and we will get into tonight's show. So for those of you that are tuning in now, this is Hannah. Hannah's from our IR team. You've met Wayne, you've met Jeremy, you've met Pat, you've met Charlie, Gemma,
Mhm.
everyone. And
Save the best for last.
save the best for last. Hannah's nervous, and we'll be nice to you tonight. And we've got lots of cool things to talk about, and you're right in your element. And I think a lot of your clients will probably pop on and be like, "Hey,
Hope so.
Hannah, thanks for getting me to 5 properties in a month," and some of those stories
Yeah.
you were telling me beforehand. So we've got a few people saying hi. Hi Ben, hope you're doing well. Joe, hope you're doing well. Pat, hope you're doing well. And we will get into it. I've got a few news articles to go into first and a couple of things to talk about. And then we will get into the main topic of discussion. So there's a lot of property myths out there, and lots of things that people have as opinions. And obviously, opinions don't pay the bills, results do. And that's why some people are very successful with what they do, and some people aren't as successful. So we'll get into that shortly. But people keep questioning, and you hear this a lot, I think, like from just new investors that are like scared about the news, they're scared about interest rates, and
Yes.
yeah,
All the time.
all the time. And you actually got asked, I think it was you that said earlier that you were asked, when will we be in a recession?
Yes, actually. Yeah, I was asked by someone outside of here,
Okay.
when are we going to be in a recession? I was like, well,
We're in a
we're in
recession.
one.
We're in a recession, right?
Welcome.
And they don't report on it until the day's come and gone.
Mm.
And people ask, the next question is about interest rates, right? Like when interest rates going to go up again, and how high will interest rates go? And there's some of the things we'll talk about tonight. But I've got my first article here. I've only got 2 articles and 1 chart, but this one here is an article that I got sent this morning. Bezos announces plans to donate a fortune hours before a mass job cut rumors at Amazon. Right? So goes on to read, Amazon founder Jeff Bezos has announced that he will give away almost $124 billion fortune during his lifetime. Well, of course he will, because he's not going to die with it now, is he? Right? And let's read into it. Mr. Bezos, the world's fourth richest guy, has revealed to CNN Business that he intends to hand over his cash to an organisation fighting climate change and promoting unity. Right? A one world government, right? Comes to mind. All these people talking about climate change, getting all these green credits and scammy things that they talk about.
Nice cover up.
A nice cover up. And then it just says here, just hours later, he's such a nice guy. A few hours later, Amazon is cutting 10,000 jobs, right? Just think about that. The amount of jobs that have been lost. Like, we've found it difficult finding staff. Like, we've got positions for about 40 staff throughout the whole business. Doesn't matter if it's lawyers that we're looking for, accountants, if we're looking for motel staff, property management staff, all the different areas of our business, sales staff, customer service staff, finance staff, finding it difficult.
Yeah.
And I can't wait until we start seeing, more of this stuff, because there's lots of opportunities. There's a lack of staff. Everyone wants too much, whatever. But there's so many jobs being cut, right?
Yeah.
These jobs are just disappearing, and there's a lack of jobs out there now. And that's because the liquidity and the money that's floating around the system is just simply not there anymore. Investors that would be investing into these businesses aren't there. They're putting their funds because they're getting better returns elsewhere and stuff like that. So the higher the interest rates go, the more safer it is for people to put their money just into cash and park it into certain things like bonds and stuff like that. And that means that the money gets sucked out of other markets, and it's not there. And you know, time will tell when we see a recession, but I believe we're in it, and the news always reports on things after the fact.
Yeah.
But I find it interesting that they make him look like a good bloke, right? He's cutting 10,000 jobs and goes, I'm going to donate all my wealth. But we look at people like Bill Gates and all those sort of people, they donate their money to a fund like the Bill Gates Foundation or whatever that may be. And when they donate it to it, they control the asset from beyond. It's a part of intergenerational wealth and being able to control things. So their children will become beneficiaries of it. It's a way of saving tax. But if you look at what they invest in, those things that they invest in, they can literally go to a company, use their trust or fund to go and buy stuff, and then in that entity that they're buying from, like whether it be a Jabby or something,
Right.
those companies go up in value because they've got
invested.
controlling power.
Yeah.
So it's just a big scam. They go, he's doing his philanthropy, he's altruistic, he's helping out the greater good and all this sort of stuff, and that's how they get promoted in the rankings of power of what they do. But there goes another 10,000 jobs. People at Amazon. If you're at these companies, like the banks are laying off staff, everybody's laying off staff. If you're looking for a job or if you're scared about your employment, reach out to us. HR at B.Invested.com.au, probably the easiest way to get through to us. Send us your resume. We're always recruiting. We're always growing. I want to get to 1,000 staff in the next 12 months. That's one of my goals, to get to 1,000 staff. So we need a lot more people in our community. I'm actually going to go on my phone for a second because this one's really important. I was explaining to the team the other day just about interest rates rising, and I always talk about this chart here, which is the 30-day interbank cash. I'll leave you on the screen, right? Which is the ASX 30-day interbank cash rate futures implied yield curve. And this is showing that next month we won't see an increase, and the month after we won't, but you can see it's starting to get very, very flat, and the top end of this is way lower than where it was. It's at under 3.8%. So indications to me showing that we're not going to be seeing a rate hike very shortly. And as I said, I thought the last month one was the last one we will see. There's the line there of where we're at, and basically anything under that line. Where's my ruler? Oh, I've got a ruler here. No, I've got a ruler. So there's the line there. Basically anything above that is how much higher that the rates can go, but I think we're pretty much at that top of the cycle. It may not go up one more time, but if it does, I believe that we're going to see it cap out around March, April, May, June in 2023. So it's exciting.
Will it be a gradual decline from there, or will we notice it
I think it'll see, like when monetary policy reverses, I could never have predicted the interest rates to go up this high. I've predicted lots of things. I did predict that they would go up, but I only predicted that they'd go up 50 basis points before the market couldn't support it.
Yeah.
They've gone up way overshot where the interest rates are today, and the recourse of this ramification, everyone with a mortgage of $1 million that's gone up by 2%, or they've gone up 2.5%, 2.8%, 2.75%. So that means on $1 million mortgage, an average family with $1 million mortgage is now paying an extra $27,500 per year. How can the average household afford that when they've got children, they've got all the things and the cost of everything else is rising. So the other thing is that in around May next year is when the really cheap interest rates start expiring. So 3-year fixed interest rates and 2-year fixed interest rates start expiring. So these people are going to be literally going from 2% to 5% interest rates, and it's going to put a lot more pressure on the economy. So that effect could move forward, somewhere from March, April, May, June. But every time that interest rates have gone up in the last 30 years, they've quickly come down within 12 months. So if you go and get the chart, I don't have the chart with me tonight, but if you go and look up the chart of interest rate increases or just interest rate chart in Australia, you will see that every time they've gone up, They've gone up, however they've gone up, but they've come down very quickly over a period of 6 months. Just as quick as they've gone up is just as quick as they'll fall. And I think that we've gone way too high, and we're going to see there's a lot of we're in a recession, a massive recession, which is exciting because that creates opportunity. Everyone that watches the news is, getting fearful from just stupid stuff. Right?
Smart investors get rich in a recession.
Yeah.
Or when there's a crash.
Well, money goes, or assets go from strong hands, from weak hands to strong hands. So the people that are scaredy cats, they hand over the assets. They're fearful. So many people at the start of 2020, when all the things were going on, were like, I've got to get out of the deal. I've got to not do this, whatever. And they parted ways with the assets so cheap, but they didn't realize that the printers were going to come on, print out all this money, and their money that they just got, which was cheap, was going to become worthless.
Yeah.
So it's very important to have a level head. EQ is more important than IQ, I think, a lot of the times.
Pretty much more rare.
Yeah, and rarer. Here's another one. Energy costs continue to impact the cost of living. So here we are. Increasing electricity costs are front of mind as the Reserve Bank, the RBA, tries to bring down the increasing inflation rate. The outlook for domestic energy prices was something that the RBA was monitoring closely, Governor Bullock told the ABE. The large increases in retail gas and electricity prices are predicted for next year to directly add over 1 percentage point to the headline inflation over the year to September 2023. So over the next 12 months, energy costs are going to add 1% to inflation, right? So when you start looking at energy costs, like I'm sure it says in here that the actual cost that has gone up. It says here
9%.
9%. Yeah. So they just went up by 10% or 15% just 3 months ago. And we're constantly seeing the cost of electricity go up. So when you look at the cost of electricity going up, and then you look at places like Woolworths, right? Woolworths sells food, right? So their fridges are storing all this. The warehouses have to store this. The trucks that deliver the food need to pay higher gas prices, higher all these costs. So these costs are not just related to your mortgage, right? We're now seeing a point where everything's going up 20-30%. They have no option but to reduce that interest rate. And by putting up the interest rate, it's just adding to the inflation level, which is quite funny.
Seems so counterintuitive, like the way that it all works, but there's always some ulterior motive as to why everything goes that way.
Exactly. And I'll put this one aside. Normally I throw them, but I feel like if I throw it, I'm going to, bump you or something. But I'm going to go to our next article. This is our last article. Here's an attractive young fella here. This is very good, right? This is not good for people that are going to be buying properties in the future, but this is good for people that own properties already. So it says here, New South Wales passes stamp duty reforms to allow first home buyers to pay annual land tax. So what that means, let's go and read this through. Homeowners could choose between paying an ongoing tax or an upfront stamp duty for properties worth up to 1.5 million. So if we notice the properties that are being impacted the most are the properties between, say, $1 million and $1.5 million, because the people that can service for property for 200 grand, they're still able to service for those properties. That's why the market's so very hot there. But the people that could cap out and they were giving everything to go and buy a house with no eaves for $1.5 million, they can't afford to now, because as the interest rates have gone up from nothing to a little bit, the people can't service the bank. So the serviceability, every time they go up by 0.25% or 0.5%, the serviceability for people comes backwards. So they need to now stimulate the economy, right? Yeah. So what other scam are they going to put in to try and boost up this fake economy? So what they've done is, if you're having to buy a property for $1 million, you're going to have to pay like 20 grand or 30 grand in stamp duty. But now, if you're buying $1 million property, you can choose between paying an annual tax of like $1,000 a year, or you can pay your 30 grand up front. But if you're a first home buyer and you're putting down a 5% deposit of 50 grand, you don't need to pay the other 30,000 now. You don't need to pay all these extra things. So it's an interesting tax, and the reason why I say it won't affect the people that already own the properties is because they don't have to come up with a decision. But what it will do is the people that are buying are now going to have an extra expense that's coming into their weekly budget, and it's going to add a whole pile of new buyers. This market that we're in is not a typical sort of recession. It's not a recession where people have gone broke yet, and I always said it would be a hyperinflationary recession slash depression. People will simply not be able to afford shit. They'll earn money, they'll have jobs, they'll have everything, but the cost of everything will go up at such a greater rate. And the people coming into the system moving forward and buying a house for 1.5, they're literally getting so much debt strapped to them, but they're having to pay for that. Unlike the properties we buy for our investors, you know, they're outsourcing the task of paying the mortgage to a tenant, and the tenant pays it. So I see this as great, as a sign of a bit of weakness, that the market is a bit soft in some areas, and they're having to put new initiatives in to keep the market afloat. So
with that, just on the back of it,
yep.
Does this mean that if you do choose the tax, you choose to not go with the stamp duty and you choose to pay over time, do you pay more in the end? Because I thought it was something like you pay, instead of paying equivalent to 21 years, it's now 64 years or something of what stamp duty would have been.
I need to look at that. Yeah, I need to look at that. I haven't got into the nuts and bolts of it, but where interest rates, but where stamp duty was an upfront thing, it's becoming more like a land tax. So it's just like, I think 7 or 8 years you would have paid it off, and then you've got to pay it again and again and again. So
buy now, pay later.
afterpay, subscription service, right? And it's very interesting, interesting. Justin said, "Hey Nathan, hey Hannah, good to meet the team. Pete made it, good to see you." Josh said, "Hi Hannah, met her the other night at the party."
Hey Josh.
If you don't know about the party we had, it was the B.Invested Christmas party. It was the first one you've been to, because it's been 3 years since we've had one, just due to every time we have one, they go and lock us down or whatever. But it was very fantastic. We saw hundreds of investors that have been able to, create massive wealth, and it was really cool because it was our 14th year of business this year, and I was actually talking to a few people that have retired.
Yeah.
Right? And
I had someone.
You're on the table. How do you tell them?
Honestly, it was so motivational. I had some newer investors on my table as well, and we had some investors that have kind of surpassed that stage, and they've got to the other end of the whole, spectrum, and they're now completely living the goal of living on their own terms. And it was just awesome for people to be able to see what's on the other end, because you can get really caught up in it, I guess, not seeing the light at the end of the tunnel sometimes. So.
I was talking to someone on your table, 47 years old, retired, started with me 11 years ago.
Yes.
Bought their cars cash, just bought their car that day, like a full car cash. Wife doesn't work, properties are paid out. It was pretty cool to hear.
That's the goal.
So
where we're heading.
But it's all happening out there. Josh said global population hit 8 billion in a world. If there is a population decrease, how will it affect house prices and rent? Will Australia make sure there is no decrease in population? That's a good question. I had people concerned that if there was like an illness, and then there was a solution to the illness, and then people passed away from something that came from that, what would happen to the property sort of market? And I think in Australia, I'm just talking Australia here, we only have 25 million people or whatever in the country. I remember as a kid, it wasn't too long ago, that we had just gone over 20 million, I think it was, or 19 million, and it was like 6 million people shorter. And I guess the thing that's attractive to Australia is that we can just keep immigration up high, right? So if people were to pass away or something was to go wrong catastrophically, like, we've got people that want to come to our country, right? Whether it be migrants coming from China or the UK or from wherever, migration's quite high. So I don't think it would have much of an impact on that front, but it could do. But I think, we're growing so fast that I don't see it being a big issue. What is here? Josh said, "I'm glad I bought assets in 2020 and still buying." Good work, Josh. It's good to see your growth. It's been humbling to be a part of your journey. Ty said it's very difficult for government to mandate a population increase aside from providing incentives, baby bonus. There isn't much that can be done. However, government stimulus also has its own set of issues, and that's what we're seeing, the ramification of stimulus packages at the moment. That's why they're trying to tighten the market, because we're getting a hyperinflation. They cannot stop the hyperinflation. They've never been able to stop hyperinflation ever.
They just drive it more.
Exactly. So, who else do we have here? We've got Praveen. Good to see you the other night, mate. Thanks for coming down from Northern Territory.
Hey, Praveen.
What else we got here? Sam, hey Nathan, do you think interest expenses and other expenses for investment properties will always be tax deductible, or could they change this one day? I think they could try, and they've tried to, but property incentives is so rampant to stimulate the economy. There's all these people look at things very two-dimensional. They'll look at things from, okay, my property will increase, it must be because of location or demand or whatever. It's only valued what it is valued at because of the fact that we've got cheap credit out there and access to that cheap credit. So if we didn't have cheap credit, we wouldn't be doing that. And if we didn't have the property market doing what it is, we would have, people literally going out and using their house as an ATM out there. And those people, it's very bad for the world to be living off this, but those people are helping people like me and like you guys become much more wealthier, because the more they go and use their house as an ATM, they pull out equity, buy themselves a car, pull out equity, go and buy themselves some furniture, go on a holiday, they're getting more indebted. If the system was to reverse, it would cause the banks to fall apart, it would cause everyone else in there. So they need to keep throwing more incentives into this big Ponzi scheme, and property is just really the product to play on top of this banker's game. It's not the property market, it's the finance market, which is very important. Kane said, hi Hannah, hi Nathan, great to see you both, appreciate the honest insights on scams. Thank you. Other top channels won't touch on these topics. Kylie, hi Kylie, good to see you. Felice, good night, good to talk to people on the same page and great stories, good job Nathan. Felice, awesome work mate, and you guys should be really proud of what you have been up to the last few years. So I guess keep the questions and comments coming through. I've got a few little topics here. You've got some questions for me, and I encourage the community to ask any questions as well. But did you want to ask me questions, or should I ask the question? I feel like you should ask me some of the questions like here and the ones that you've got.
So we're talking myths or property myths. I like to think of them as self-limiting property beliefs because they limit our progress if we believe in them. But one that I hear a lot is the whole low rent, low socioeconomic locations, keyword locations, is bad and will attract shit tenants, and we want to avoid that. That's what I hear a lot. So what's your take on that?
I guess if you drive through those areas, you might feel a bit unsafe or whatever. But investing in a property, like, I don't buy in those areas. Like, I built my portfolio in Mount Druitt 20 years ago. I've literally that old that I've been investing in a property almost 20 years now. And areas which I used to be very scared of, you'd see fire damaged houses, burnt down houses, kicked in houses, gangs of kids walking the street. And those areas I made a lot of money out of. There has been bad stories, but there has been great stories too. I've got tenants who have been in properties for like 18 years that I've owned, right? And they just love being my tenant. I don't know why, right? I have tenants in these properties that, the tap might break, they might go fix it themselves. I've got a property, I had a property, I owned it half. I don't own properties with anyone. I own a couple of properties over the years, maybe like 3 or 4 over like hundreds of properties that I bought. I've gone halves with people. So I had a property with someone, they bought me out of it. It was in Vaucluse. Vaucluse is located next to Double Bay. It's the most number one suburb in Australia, right? And they call it Double Bay, Double Pay, right? But it's also known for the cocaine capital of Australia, right? Yeah. So the parties in Western Sydney are different to the parties in these areas, right? I've had properties that have had a nice family in them, and then, they might split up or someone might go their own way, and then a new partner comes in and the whole dynamics of the household changes. And then you might start seeing, fights or drinking or whatever, and a good tenant can turn bad. But if I look at properties in, I don't know, Vaucluse that I bought for 600, they're now worth $2 million. It's gone up. But I look at properties in Mount Druitt I bought for 150, they're now worth 800.
Yeah.
It's gone up like 6 or 7 times.
Yeah.
The rents have gone up far exceeding that. But the most important part of your question is that you ask low rent, low socioeconomic areas would do that. That's assuming you're buying low rent, low socioeconomic sort of areas, low incomes. So when I'm buying properties, I look at all the properties we buy for myself, from our clients, for you guys, and the properties that we're buying, I'd only say like maybe 10% of them would be in a rough area.
Yeah.
90% of them are in nice greenfield areas that have got families and people in. They're not in rough areas. So you don't need, sometimes people think cheap and good value, and they get them confused. They go, I have to go buy cheap. I have never bought a property in Broken Hill or any of those little shitty towns, right? I see them as massive risk. And the bank, if we look at Broken Hill, for example, the bank would value, and they only give a loan at 50% because they hate the area, because it's so shit. And it's not an offense to anyone in Broken Hill, but it's so volatile, it's not a good market.
Yeah.
If we look at areas like holiday accommodation, student accommodation, the banks only lend you 50% if you're lucky. The value can't ever go up. So I don't like to buy those type of assets. So it's important to get a good mixture of value, good pricing, buying at the below market value, buying it where it's cheaper than rebuild costs, and all those things to factor in. But I don't think you have to go for, a bad property and a bad tenant or something like that.
Yeah.
So, yeah. Next one. You got something else for me?
Yes. I've got lots of questions for you.
Mm-hmm.
Well, what about, I do get this a lot as well. I only want to buy in a CBD area, or I only want to buy in a population that's a very large population.
Okay.
Yeah, that's kind of a belief of people where there's no value anywhere else.
Well, I think if that's what you feel comfortable with, go and buy it, right? But you would be missing out tremendously. Yeah, you'd be missing out tremendously. So, for those of you, a lot of you guys had come along to the B.Invested Christmas party. It was an invite only. It actually felt like a big wedding there, right? It was like awesome. A wedding in overlooking Sydney Harbour, and it felt like a really cool wedding. It was my favourite one over all the last 14 years. Favourite Christmas party. And what was I going to say? What was the question again?
About CBD areas, like
yes. So you heard at a Christmas party, we had like some people got awards and stuff. There was a lady that came up, and she had bought a property. She talked a story of a property that she bought. She had 16, 17, 18 properties in 2 years that she'd bought. And then one of the properties that she bought was $59,000. It was a shitbox 3-bedroom property. I talk so highly of the properties that we buy. I just say it's a shitbox. It was $59,000, right? And she gave the story that she was scared of that.
Yeah. And
she bought it for 59 grand, and it rented for $200 a week.
Yeah.
She pushed the rent to $340 or $350. It went to like $380, and I think now it gets $500 per week. That thing had sold previously for $500,000, and now it's worth about $200, $220, $250, wherever it would sell for. Yes, she bought it for 59 grand, but that thing's quadrupled, right? In the last 2 years, I don't know whose property has quadrupled, right? These properties do go up, and it's to find the value. It's something that's very, very important. I've just have a look here at some of your questions and comments. I'll keep going to this, and we'll come back to comments later. But you'll see growth in many other areas than just capital cities. You look at Sydney, in the last 2 years, the Gold Coast has tripled in a lot of areas.
Yep.
It did nothing for 15 years. Everyone said it was a shit market. Now everybody wants to buy there, strangely enough. I'm not buying it.
Yeah,
I'm encouraging people to sell, right? I'm encouraging people to sell, right? If you own a property in the Gold Coast, you're thinking of selling, I've set up a sales team to get the maximum sales prices in the Gold Coast. So, people think, that's a good market, let's go buy it, it's gone up. that was regarded as crap. You look at Sydney, Sydney hasn't tripled, right? Sydney may have gone up 50% in a lot of areas. Some areas may still be less than what they were 5 years ago. So not all markets are linear, and some go up at different times than others. And yeah, I think that, yeah, a lot of people, yeah.
Well, that's true. And I guess, so back in the day, in the 90s or whatever, the interest rates were, what, 18, 20%?
You look at me like I'm so old. You look at
You
me
remember
like
that like it was yesterday, don't you?
yeah, I was 30 back then. No. Yeah, so a lot of people have a concern about the market that we're in today, and they go, well, interest rates are going up, right? They're at 3%, not even 2.8% at the RBA. Interest rates are going to go up to 20%. How can you guarantee me that interest rates will not go up to 20% like they did in the 90s? Well, let's just look at the amount of money or currency that's being printed out there sloshing around in the system. You didn't have a mortgage at $1 million in the 1990s,
No.
right?
Yeah.
$1 million at a 10% interest rate is 100 grand a year. People's incomes don't even support that. They're not doing it to bankrupt everybody.
Yeah.
They're doing it to try and stop inflation. They can't
Yeah,
get through the
slow.
inflation.
Yeah.
But they've already gone too far with getting it to 3%, right? Not even 3%. They can't even get the interest rate to 3%. If interest rates go up to 6% and they double again, everyone will go broke. The companies will go broke. The world is awash. In the Keating government, there was a government back then, which was the Paul Keating Labor government, and everybody hated this bloke. And like I was like 7 years old or something at the time, and he said, "This is the recession we have to have," right? And everyone hated him because they all went bankrupt, and all he could say is, "Well, it's a recession we had to have. We had to have it to get over this," right? He wasn't the cause of it. Everyone held him as the cause of it because he was a leader at the time. But every other country, no one realized in 1992 that every other country had gone into a recession, right? And it took the whole 1990s to get out of the debt that he had caused. So John Howard came in, and it took him like 10 years, 12 years, whatever, to get the debt from $96 billion that the Labor government racked up to getting it to a neutral position to pay out that debt, and that to sell off country-owned assets and stuff like that. The thing today is that just in 2020 alone, the government printed $1 trillion worth of money and got into debt, right? They bought bonds. So the difference is that now the government is so indebted, right? If the interest rate's at 3% and the interest rate was at 10 basis points, so 10% of 1%, that means when the government's loans roll over, right, when they're fixed period of those bonds and they have to go and buy more bonds, sell more bonds, that the government's debt has gone up 3,000%, or 30 times what it was a year ago, right? So if interest rates go up any higher, it's already gone up 30 times. Imagine the government, I don't know what the debt level is in their balance sheet, right? But if you look at the debt, it might be like 10% of the annual cost, maybe 5% of the annual cost, whatever it is for the government. When that debt rolls over, it's going to be 30 times higher. And that's where it's at today. If it went to 10%, that would be 100 times higher, right? It cannot sustain that level of debt. So that's why I don't think we're going to see interest rates go to 10% or to 20%, because it's mathematically impossible. The country would go bankrupt. And it wouldn't just be Australia, it would be every country. And if we look at countries around the world, and this isn't just theory, it's just basic mathematics and calculating of what's out there and what can happen. UK is in a massive recession. They're going backwards now. They're going to have to turn monetary policy. We're now starting to see in the middle of all this stuff, they're saying, well, we need to control things by pushing interest rates up. Oh, let's give stimulus packages, right? The cracks are already there, showing that we need to reverse policy. We've gone way past what the system can support. So, yeah. Next myth?
Old properties. Old properties are bad.
I hear that as well, right? You buy a brand new property, 10 years' time, that brand new property will be an old one, right? One thing that's different is that they don't make them like they used to.
No.
You might say that I'm old, but no, just
maybe.
They don't make them like they used to. No, I don't know. I'm just saying, right? But the properties that are built now, they are built more poorly, right?
Yeah.
So you go to a unit complex and you bang on the wall, right? You go to one of those old red brick units in the city or out western suburbs or whatever, you can kick those walls and it feels like a jail cell, right? The
So
tiles are
true.
the tiles in an old bathroom are fucking concreted on the wall, right? They ain't even tile glued, right? They are concreted to the wall. You go to a new unit and you knock on the wall and you can punch a hole
Oh,
because it's made out of gyprock,
yeah.
right? These things aren't like they used to be. So properties that are new are like buying a new car. If you buy a brand new property, anyone that's bought a brand new property, the salesperson for selling you that property is getting paid at least $30,000 and anywhere up to about $80,000 as a commission.
Mm-hmm.
They're the slimy salesperson with a suit and tie on. The properties, when you go to the bank and get a valuation, it's not even worth what you've paid for it,
Yeah.
right? So there's all these scammy
And you're
sales
negative off the bat.
you're going backwards. So the first rule of buying below market value, you're paying above market value. You see every day of the week. So people watching this, and it might be a good time for you to explain, right? Like what you do here, like your investor relations, just
Yep.
like your colleagues that have been on.
Yeah.
When I buy a property, you deal with the clients
Yep.
and communicate, but I give them the advice, I give them the guidance, I do the strategy with them, I present them the deals, I locate the deals, I negotiate the deals.
Yep.
That's my role in it. And you take care of the clients and you assist, and maybe you want to share some of it. Maybe I'll give you a minute to talk about what you do and some of
Okay.
your clients and stuff like that.
Okay. Yeah, so as an investor relations, really we're like an extension of Nathan. We work alongside Nathan to help support our clients, to hold their hands through the process, especially when we've got a lot of clients that are buying multiple properties at one time. They need that kind of support and getting them to the right people at the right time, being that point of call. So that's really my role and the other investor relations that you guys have met as well. And so Nathan does all the kind of the work with the properties, but then we kind of walk our clients through it so that they're not left to their own devices. They've got someone to kind of walk them through to the end as well.
My goal is everybody that's in my team goes and builds large portfolios, and we've seen Gemma and everyone that's building their own portfolios. So we're sort of on that journey of wanting to do the same things. And I remember when Gemma started, she was on here the other week. She talked about the first day she met me. She goes, "You sound like you're full of shit."
Yeah.
Right? And then it took her a year to get ready to buy a property. And like some of your clients, even though you haven't been here forever, some of them have maybe been talking to us for like 6 months, 2 years, 3 years, and some of them clients are from 10 years ago, and you're helping them, and they're like, "I'm at a position now. Nathan helped me back in 2012 or 2010. I made $5 million out of my assets. I still got them. What do I do?" And you're like, catch up with Nathan, and then we might sell off 2 properties and buy 3 blocks of units, and working with those clients to get them to the next level of their journey.
Yes.
But with the properties that I buy, I've got a question for you. Like, what would be your top 2 clients that you're working with at the moment? What would be some of the things that you've seen that they've been able to do in 2020? Because one of the other things, like, you can't build a portfolio of 10 properties today. You can't buy 5 properties in a month, right? What are some of the things that you've been working on of recent with your investors?
Well, I do actually have a client. She may be watching, I'm not sure, but she is a very recently. She's come on board recently, so she's a new investor, starting out here. She actually moved countries and came here and is kind of just starting everything fresh. And she only came on end of September, and as of the beginning of this month, she's on her 5th property now. So
a month, 5 in a month.
Yeah, 5 in a month. And
how old would she be roughly?
She's mid-20s.
Mid-20s.
Yeah.
Mid-20s, 5 properties in a month. But it's impossible to do it, right? People have been watching these videos for years.
But you know what? People think that they can't do it, or they may even have the capacity to do it, and they have the reasons that kind of get in the way, or maybe they're like, oh, the interest rates, or whatever it is that gets in the way, even though they have the capacity. People look at people like the client I'm talking about and say, oh, well, she must have been better off, or she must have had something going for her that allowed her to do it. But really, it's just the mindset. It's really just the action and doing it that sets you apart at the
I
end
know,
of the day.
I know who you're talking about. She's going to do great because
She
she's
is.
like, her mindset is like on point. She's
Oh,
like, this is what I
yes.
need to do, and she takes action, and it's like, it's really cool.
She's driven by her goal and
Yeah.
not driven by everything
Emotion.
external. Yeah.
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 And I know sort of when I speak to people for the first time, I can tell like their mindset, and I can tell
Yeah.
like sometimes like people ask me lots of questions, and they'll be too over analyzing things, and that can lead to like one of two things, right? They can either then go, okay, I'll get it and push on,
Yeah.
or they can just keep feeding that
keep,
feedback
yeah.
loop.
Yeah.
And I've seen people, and the coolest thing that I've seen over the last 14 years is people that are very scared, and then they get a bit of momentum, and then they kick ass. Like, and
Yeah.
they've been procrastinating for years, and not taking action, and then it happens. So cool. And with your what I was trying to get to is that with your clients, when I locate the deals and I negotiate them, probably about 50% of the properties that I buy are cheaper than what they were 10 years ago or what they were 5 years ago.
Yeah.
A lot of the people that I'm buying the properties off have paid 300 grand for a brand new property, and I buy it for 200,000, right? The poor bastard has held the property, they bought it new, shiny, bought it with that mindset. I've held it for 10 years like a surrogate mother to the property. It was negative cash flow, all these things that were wrong. It's now turned positive cash flow. They're like, I'm going to dump the property.
Yeah.
They sell the property. It's positive cash flow now. It's still got depreciation. It's modern, doesn't need any work. And that's, the opportunity. So I do like new properties, but like, why would you buy a new property for? Like, it's like, tenant's going to break something in it, do whatever. It's like, it just happens.
And like, we had a property recently, one of our investors got through, and it wasn't your newest property, but it had 80k in it. Like,
Okay.
The market,
equity.
the current market valuation online was 80k more than what they were buying it for.
Yeah.
And it's like, well, are we going to question if it's new? Are we going to question what it looks like? Like, if you're going to just say no to...
Well, when I look at doing a deal,
potential?
I'm thinking about, what, and this is what I always ask, this is what I always say to people when I'm talking to our clients. I feel like we're having a business chat and people are watching us, right? But what I say to our investors, like if someone's scared like that, I always think about like, if you wanted 100 grand, right? If I said, let's say that you're not sitting here beside me. Let's say that, I don't know, I'm in Queensland and you're in
Right.
Sydney, right?
Okay.
And I say, hey, I'm in Queensland right now. I've got 100 grand. You just got to come and pick it up, right? You could sit here and go, oh, I don't have time. I don't have this, or whatever bullshit excuse you want to say, right? But let's assume that you say, okay, great.
Yeah.
I'm going to come. I'm going to pick it up. You arrive to Queensland, wherever it is, and you say, where's the money, right? And I say, there it is over there. And I show you a big pile of 5-cent pieces, right? You can sit there and go, I don't want 5-cent pieces. I want fucking $100 notes, right? The reality of it is that that's 100 grand there.
Yeah.
If it was me, I'd be like, cool, there's 100 grand. I'm going to get my shovel, put it in the boot of my car, and get the fuck out of there.
Yes.
But people would be sitting there procrastinating, going, oh, it's too heavy, my back, this, that, the next thing. You want the result. You don't want, and people get caught up in that stuff. And
It's very true. Yeah.
it is what it is. And investing isn't for everyone. I always say, right? If investing was so great, everyone will be doing it. But then I wouldn't have any tenants. So I'm happy that people are still tenants.
Yeah.
People are still renting. Otherwise, we wouldn't be getting all the cash flow. So we want to get the cash flow, and those people can do that.
Yeah. And it's also, we kind of educate people along the way. So you don't, a lot of people may come through with a different mindset, or really an older mindset that's not helping them along the way, and that's why they've come to us, and we kind of mold and educate them along the way to get them there. So
I think that's probably one of the biggest things that I do. Everyone thinks, oh, Birchie gets me cheap properties, whatever. But I think the structuring, the guidance, the advice, the strategy, that's the mentoring and the nurturing of that is very, very important as well. Like, you can pay us for a fee, buy your property. We've been doing it before did you know, right? Because like you've been here for a while now, but 14 years ago, there was no such thing as a buyer's agent. There was maybe like 3 or 4 people out there, but now everyone appears to be an expert.
Yeah,
right?
every man and his dog.
Yeah, they do courses on how to be a buyer's agent. It's like they don't know shit. They don't know the properties. It's just, yeah, funny. But the guidance of structuring, like I've seen the things that have gone bad. I've seen the things that have gone good.
And you've experienced them for yourself too.
100%. I experience them to this day. I learned things. Sometimes I'm sitting there. It was only the other day I said to one of our investors, he texted me about something totally random. I'm like, I know this guy, and he's probably watching this right now. I'm like, I know this guy wants to retire. And I said to him, hey, sell off one of your properties. And the property we bought for like 200 grand, it's now worth 600 grand. It's gone up by 400 grand.
Mm-hmm.
That 400 grand, you could use that to buy a block of units, right?
Yeah.
You bought one little shitter, went up from 200 to 600, take the 400 grand, use that to buy a block of units. That block of units will give you 50 grand a year.
Yeah.
Do that twice over, you got 100 grand. Let's retire.
Easy retirement.
So, and get rid of 200 grand, 400 grand of debt and retire. So, we're constantly growing and evolving with our journey as a business, as me as a person, as everyone in the team is growing. There's two colleagues, one here, one in that room. I'm just pointing in my office. They've
Like
been with me
everyone
for
can
10 years.
see.
They've been here for 10 years, right?
Yeah.
One's got 10 properties, one's got 20 properties, and it's like they've grown and they've learned. And one of them was in your position, literally, like was the first person in that job. Yeah. And it's like everyone grows. We all grow together. So, I've got lots of more myths here. How are we travelling? Oh, we've got heaps of time. Let's keep going. Any other questions you got there, or myths, or anything there? Because I've got some here that were thrown my way.
Well, actually, this is more. So actually, we were just talking about you. You've experienced a lot of the shit, and that, you've gone through a lot. So I was curious, and maybe other people are curious too.
Mm-hmm.
What were your limiting beliefs that you kind of started
Oh, they were so shit, so shit.
and that you had to overcome? Because, go.
Yeah, so I remember once, I've shared this a lot online over the years. I had this girlfriend, I was like, 18 or something. It was 18. It was before the internet,
Were the
right?
dinosaurs around at that time? Or?
No. They just died off before that,
yes,
right? Yeah.
Of course.
There was no internet, there was no realestate.com, there was no YouTube, there was no streaming. Like, you had to do dial-up, basically, right? Yeah, ICQ, MSN, all that, right? And I went to like Queensland because I'm based in Sydney. A lot of people think I'm based in Queensland for some reason because I buy properties up there. But I remember going to Queensland, and in 1990s there was this thing where people would fly you. There was all these slimy financial planners and accountants. You go to your accountant's office and they say, I've got an investment opportunity for you. I'll put you in contact with this guy. Tremendous. You can buy a house for X amount of dollars, whatever. And then you'd go and meet this person. They'd say they will fly you to Queensland, and you could go to Queensland on a holiday, and you meet the guy. He picks you up from his BMW in a suit and takes you around, shows you the estate, shows you all the things going in, and you buy 2 blocks of land, you build the houses on them. And in the 1990s, there was all these people that would do that, and they'd be paying like 400 grand for a brand new house of land that was only worth 200 grand, right? And they'd like
Sounds
screw
familiar.
these people, yeah. And these people, people lost money, like in the 1990s, really bad. And I remember in 2003, 2004, it was the end of 2003 going into 2004, I was 18 years old. I was going to the Gold Coast, went to go SeaWorld, Dream World, Movie World, all those sort of things. You go on, whatever. And this chick, and I said to her, I was dating her for a few years, and I said, I want to go to this place called Logan, right? And Logan was like the Mount Druitt of Sydney. And someone had told me, it was just like, because you couldn't look it up online, there was no Google Maps, nothing. It was like Alta Vista was the domain, like Yahoo and Alta Vista. There was no Google. Right?
I've never even heard of that.
It was Alta Vista. I don't know if it's even there. There was a thing called Ask Jeeves.
Who
right?
was Jeeves?
I don't know, something. It was a search engine. There was no Google. There was no Google back then. And they'd have all ads on the side of it and shit. It was like really crazy. And then I remember going to Queensland and I was like, fuck this place. And I went out and I found units for 50 grand, houses for 80 grand, right? And Sydney had doubled, and it was in a peak of a boom, right? Sydney market crashed at the end of 2003, right? 2003 Sydney market crashed.
Yeah.
It went backwards. And I went to Queensland, and I went, Queensland market's crashing. People lose money when they buy in Queensland, Gold Coast, Brisbane, all of them total rubbish. You don't buy here. It's not worth it. Um, and units, I don't want to buy a unit. That's a common one, right? Units don't go up in value.
Mm-hmm.
Um,
That's what they say.
and well, that's what it is, isn't it? Units don't go up, right? And then if the property has a problem with it, I can't fix the tap washer, right? Because I used to fix all my things. I was on 40 grand a year. Interest rates were 8%, 9%. Like, just putting it into context, right? Rents were like $100 per week. Like, it was different market, different world.
Yeah.
So I had my own issues to deal with. And I went home and I was like, yeah, good luck with that. I went and tried buying a property. I think I bought one in Tamworth afterwards. Well, Tamworth didn't do much, did okay, it doubled. The place burnt down, I got an insurance payout,
Nice.
got tripled my money, but whatever. But and then I kept buying in Sydney, and then I bought on the Central Coast. I did okay, I did well. But those properties that were in Brisbane are worth from 50 to 80 grand, are worth between 250 and 600 grand now, right? They went up between the year 2004 and 2010, and they went from 50 grand to 200 and from 80 grand to 300. The market crashed in 2010-11, went backwards to 2015, and then they took off, and now they've gone up crazy. But if you looked at the market from 2010 to 2016, you'd say, well, why would you buy there? It's gone backwards, right? And people used to say to me, why would I buy in this market? People used to literally challenge me and say, why would I buy in Brisbane? Why was I buying the Gold Coast? Like, because that's where the fucking money is, right? And they didn't listen. And now people say, I want to buy in the Gold Coast now. I want to buy in Brisbane.
It's too late.
It's too late. But my thoughts were, properties don't go up in Queensland. Well, they obviously did. It took me until 2009, 2010 to start buying in Cairns, and I worked my way down. I bought in Brisbane for the first time in about 2011, and then I bought everything in that market because the market turned to shit. I don't buy in the hot markets. Everyone thinks you buy in the top of the market. Like, oh, we've seen growth, 10% growth, another 10% growth. That's good. We're going to keep seeing the growth. Well, the market can't sustain that level.
It's peaks.
When the market's at a bottom and it's lost 10% a year, it's like, well, you can't get any cheaper than this. So you find a bottom. So that was wrong. The myth of units don't go up in value. Well, those things have had the most exceptional growth in my portfolio and for many of our investors. Our investors buy blocks of units today, and they pay 500 grand, $1 million, $2 million, $3 million for those things, but they're selling off their shit that they bought that was a singular unit, right? But if they didn't take that action, they wouldn't get to the result. So units do go up in value. And the myth about doing the work myself, I realized after taking, this was something really funny, is that I was painting a house myself. I took off 2 weeks annual leave to renovate a property, right? And at that point in my career, I was on like 100 grand a year. I was a manager for a media place, and I was doing like 100 grand a year. I thought, I took 2 weeks off. That's 4 grand, right? It was 4 grand that was owed to me, whatever. When I quit my job, that pay out annual leave, and I retired. But I took 2 weeks off, so 4 grand of income, and I tried to paint a place and ran getting fucking holes in my hand, my clothes getting painted on. The paint ain't as good as a painter, right? And I tried to do the work to try and save some cash. I'm an investor, right? I need to know my worth. 50 grand on buying a property below market value is what I need to do, not painting and outsourcing what I can do for 2 grand or 3 grand. So, those things where people think that they need to save money is costing them money.
And time.
Time.
Yeah, very true.
So that's one of the things, and there's lots of things that I've learned over the years. But I said at the start, opinions don't pay the bills, right? And the numbers, like the numbers are what's important. And having a strategy, having a plan, crucial. Any other questions you got for me, or myths that you got?
Any other myths?
I've got some here that Carolyn gave us, and
Oh, yeah?
I asked some people on the way down. Like a lot of people think, oh, Birchie might sit in his office, whatever. I'm running constantly throughout the day. I walk in the office. What happens when I walk in the office?
Oh, you get swarmed.
It's like the pinball machine. Like, boom, 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 boom. It's like, fuck, leave me alone. But whilst I was doing that, I asked everyone, tell me a myth, right? So I've got a few here. What have we got here? People talking about having a deposit to buy a property.
Yeah, I love this one.
Like people say you must have the money saved up.
Yeah.
Well, you don't need anything, right? You could have equity in your existing property. You could have, other alternative options for saving that deposit.
Yeah.
One of the things is that you can't buy cheap properties, right? Do you hear the people asking you that? Like,
They're always surprised, yes.
Where can you find a property for 200 grand? That was 10 years ago
Yeah.
price. It's like, well, you're looking in the wrong place.
Yes.
I've bought in Brisbane CBD in this last month for 200 grand or less, right? I've bought in Perth for less than 180 grand, right? On every week I'm doing that, yeah? I'm buying in I'm buying in Sydney for under 300 grand this week, right? With 50 to 80 grand equity in it straight away. So, you can still buy properties for less than 100 grand. Actually, you asked me if I was going to talk about this tonight or not. I said to Hannah, you're the only person in the office. Go sit on the emails, and you're going to get swamped with people asking questions. Before we came on here, about a half an hour before, I got my hands onto a block of land for $20,000, and I put it on my personal Instagram. Follow me on Instagram. It's just Nathan Birch _ or something. I don't reply to messages on there. I'm too busy. I get 2,000 emails a day. I was watching my emails the other day, and it came through like every minute I'd get 4 to 5 emails. I can't even read the things.
That's so much anxiety.
It does. It causes me.
Oh,
I'm
God.
2 days behind on emails. So I'm not trying to be rude by not replying or that from my personal life. If you message the B.Invested one, we'll
Yes,
get
that's
back
why
to
we're
you.
here.
That's why the team's
Reach
here,
out
right?
to us.
But you copped like 7 or 8
Oh, it was flooded.
emails within like 10 minutes of me sending the post out. So you can buy properties in 2022 for 20 grand.
Who would have thought?
That is a rental.
Land,
Yeah.
like 700 square meters.
700 square meters of land, 20 grand, that's $28 a square meter. It's cheaper than carpet.
I love that.
Right? If you wanted to put the electrical pipes in, the sewer pipes, and the concrete strip, it would cost you more than 20 grand without the road that goes to the house, right? You can't build it for this.
Yeah.
So to think you can't. Hannah said to me, if someone asked me the question, where do I get it? Can you get a loan on the land? I laughed. I said, put on the fucking credit card, right? Put on the credit card. I'm joking, right? Because we don't give financial advice, but it's stupid how cheap it is, right?
Ridiculous.
Yeah. We've got investors that have bought these things and have sold them. 20 grand's all they got. You can buy a property for 120 grand or 100 grand. 20 grand deposit gets you into that property.
Cash flow.
Positive cash flow. Renting for $300 a week for 120 grand. Opinions, you can't buy properties at $1 million. I'll tell you who's going to lose in a market like we're in right now. Someone paying $1 million, they have all their money, they go and buy a principal place of residence, and then they're stuck on that mortgage for the next 30 years. When I spend $1 million, I can spend it in like 10 minutes actually now, but when I spend $1 million on a property and I build a portfolio, or I'm at the foundation level of a portfolio, $1 million gets you 5 sets of tenants, right? And it brings you in 2 grand a week, or something like that. So be diligent with what you're spending. And I think that takes to the next myth that people have, is that you need to buy your principal place of residence.
Yes. Yeah, we have so many people that come on and they're like, oh, I wish I did this 20 years ago before I bought my principal place, or whatever it is. Or they're coming and they decide,
well, they got the question, should I buy a house?
Should I buy a house or a principal place? And I love when they come in there in that decision phase, because it's like, yes, this is a great time because you can do so much more.
We're like those little Mexican kids on the old El Paso ad. Do you remember the taco ads?
Why not do both?
Why not and they put you on their shoulder and carry you around. But
that could be the theme for next Christmas party.
yeah, well, Mexican, right? Do both. Can you make a suggestion?
Yes.
Please, that'd be fun, right?
That'd be great.
I feel like I smuggle Mexicans, especially the last 2 years. People call me up and they say, "Hey Nathan, help me out. I don't want to get, something happen to my body. I don't want to lose my job," right? We help people reach financial freedom for whatever reason, right?
We don't ask questions.
We don't ask questions. We don't look for your badge, right? We don't worry about your QR. That's all right. We don't worry about your choices in life,
That's it.
But the thing is that you can do both, and I think about it like as we used to have back in the day. Like when I first started this business, like 14 years ago, I had a mate, Daniel, who was a business partner of mine at the time. He used to do map sessions and stuff, and he got to like 20 properties in 2 years, and everybody loved that, and all that sort of stuff. And he went on and retired. And I spoke to him this morning, actually. Like he's buying properties and selling properties, and he does stuff still. When we did map sessions with people, I used to have all these funny analogies, right? And I used to talk about Lambos, right? I don't know, because I used to buy stupid cars and stuff. I used to have $1 million worth of cars in the car park.
Oh
Now
my
I drive,
God.
I've got a fucking Suzuki.
Yes.
Driving a Suzuki at the moment. Where's the car? I don't even know where it is. It's a Suzuki, a bright yellow Suzuki. Funny, right?
It's hilarious.
But I used to ask people, if you had $500,000, would you buy, and you wanted to buy a car, right? You could afford a Lamborghini. And if you wanted a Lamborghini, you could buy a Lamborghini, right?
Mhm.
With your $500,000. But the next day, if you spent your $500,000 on the Lambo, you'd have to pay for a service, pay for rego, pay for petrol, etc., and insurance, and those things aren't cheap.
Mhm.
You could, with the same $500,000, go out and buy 20 Ford Falcons. Ford Falcons used to be relatively cheap. Toyota Corollas used to be relatively cheap, right? But you could spend that on getting 20 cars instead of one car.
Yeah.
If you bought that Lambo, you'll have to pay for all the shit and you'll go broke with servicing it, right? They call a boat a money pit, right? You spend $500,000,
Yeah.
$2 million, $3 million on a boat, you're just throwing money at all the time. Engine blows, this blows, servicing, that, next, yada, yada, yada. I've never bought a boat, and I don't really, I have a goal for getting a boat, but it's not really my thing, right? But you could buy that car and you're forever chasing it, right?
Yeah.
Having to fix it.
Yeah.
You could buy 20 Ford Falcons, send them out to be an Uber, a taxi, whatever, and get income coming through, right? And with getting that income from those 20 Ford Falcons, you can then use that income to go buy your Lambo,
Yeah.
and then go buy the boat, right? And go buy those sort of things.
And you don't have to sacrifice the income that
You
you're
don't have to
getting.
sacrifice it because it's
Yeah.
all about the cash flow.
Yeah.
So when buying a property to live in, people think, okay, do I buy the house to live in? Do I buy the investment property? When I bought my first principal place, I sold my first house ever just for the fun of it, right? And I regret it because I don't hear people say they're happy they sold a house,
No.
but I used it to go and buy my first principal place. It's like driving. I talk about you hop on the taxi to get to the airport to get to Perth,
How do you
get
get
off
to
the
Perth?
size.
Yeah.
So I sold my property from 248 to like 450, 460, whatever it was. It did okay. It wasn't the greatest, but it's probably worth 700, 800 now. And that property I sold, I took out like 250K profit. I used that to buy my place for 1.2 million. It's now worth 6 million. Done nothing to it. Added a shed. Hailstorm came. Got the insurance. Got my shed for free, basically. I really didn't. I was going to build my big dream home there. I just bought that instead of building it. I just bought it. But at that time, I was like, how am I going to pay for this? Right? Interest rates were 7%. All that. I put up like 30 of my rents by about $20 each. Some were $10, some were 20, some were 30, some were 40. I got about $700-800 a week extra rent just by pushing out emails.
Yeah.
My tenants paid for me to live in my cool house,
Yeah.
right? That's how I did it. I didn't see, you didn't see me go, oh, I'm going to go work for 40 years,
Right.
get 50 grand a year, 100 grand a year. Let's say you're a fucking CEO of a company, earn 250 grand a year, right? 250 grand a year over 20 years, that's like $5 million. You've got to pay taxes, your lifestyle, all that sort of stuff.
Mm.
How can I buy a $5 million property cash? I use the assets that I got along the way to go and buy that stuff. And people think you must go and buy the principal place residence first, or if you buy the principal place, you can't do it. I think it comes down to strategy of that.
Yes.
So you don't miss out on one. I think everyone should be in their forever home.
Yeah.
We've helped people get in their forever home. People quite often sell off their investment property and go, I bought 10, I sold off 2, I bought my house, I'm living life, I'm happy with that. And it's not about getting 250 properties, right? And,
Yeah.
yeah.
You're just trying to leverage them so that you can get to your goal. And
Exactly.
that's the whole point of what we're doing is
Getting people
you
to the
that
goal. So we say live life on your terms.
Yeah.
Opinion or myth. It's the land that increases in value.
It's a good one.
The house decreases. The house goes down. The unit goes down. You must buy land.
Yeah.
Well, ask anyone that pays land
I was
tax
just about to say that.
how that goes for them, right? The land tax kills people.
Yeah.
You could buy one house for 500 grand, the rent's for $600 a week if you're lucky, or you could buy 6 properties for 200 grand a piece that rent for $350 a week, whatever the case may be. You've got now 5 or 6 hooks in the ocean instead of one.
Yeah.
The growth goes up on 5 properties, not just one. The bigger picture is what's important.
Yeah.
If the market doubles, do you want to see $1 million turn to 2 or 5 million turn to 10?
Yeah.
They're the things you need to be asking yourself.
And that's how you mitigate your risk too, because if you've only got one property and something goes wrong or it becomes vacant, you're the one that forks that. But if you've got all these multiple properties, multiple income streams, one goes vacant, it's fine because you've got other protections in place, and that's really smart investing. And it doesn't matter if it's a house or a unit.
Yeah.
Like, it's good
They'll
to have a
run.
mix of anything that has value. It's the value that you're looking for. It's not what type of property it is, what location. It's the value.
I hate
the end of the
I hate
day.
houses. I hate houses, right? I used to buy any houses. They've done decent for me, but the units have done far greater.
Yeah.
But then
in a quicker time frame too.
quicker time frame, and then because I've been able to do multiple
Yeah.
across.
Yeah.
But then from that, I've then skipped the houses and I've gone to massive land areas that I can subdivide. If you're going to develop, who wants to build? What are you going to do? Buy a house and build a granny flat and lose your backyard? Like, it's bloody stupid. They sell people this because they want to sell you granny flats, and there's all these companies out there that push these sort of things. But I'd rather build an estate. Right? I want 20,000, 50,000, 100,000 square meters to build estates. I want to build the houses for the next people, or build blocks of units.
The granny flat, it seems the most achievable thing. That's why they drive it into people, because it's like, I can win people over with this idea. But we think so much bigger than that. You can actually do so much more than that. You just need to have the right strategy in place to get you there.
Yeah.
Yeah.
Why would you want to own a granny flat when you can own a whole motel?
I know.
Right? You think I'm fucking so smart and so hardworking and so got a job that's paid so high to go and buy motels? Like, they've come from, how did I get there, right?
Yeah.
Like, there's the questions, you know, like, what?
Building that foundation that got you there. And that was the
Yeah.
units, the
little
units,
units,
the
yeah.
little things that you wouldn't have thought wouldn't.
And I still buy them. I
Yeah.
still buy those little things.
Oh, and
Still
our
is-
investors are buying them every day. And
Yeah.
we had one investor hitting, he just at the Christmas party,
Yeah.
won an award for the Hall of Fame award for
Mhm.
reaching just over 20 properties in 1 year. And
20 properties in a year. He
Just
came on
every
board,
day.
spoke to him Christmas 2020, and yeah. And I guess that takes me on to another myth, right? Granny flats. Are they a good thing, right? It costs you 150 grand to build a granny flat. Like, your value of your property, you're over-capitalizing on that property. And I think a lot of people miss out, and they're narrow-minded. They're like, I bought the house for $200,000, and now it's worth $700,000. If I had a granny flat, it's going to be worth $800,000 or $900,000. It's like, your property's purchase price that you bought it for is not relevant, because you could offload that property today and that would be its new price because the opportunity cost, right? So if you're looking at a 700 grand, you spend 200, it's now worth 850. It's like, well, you've gone backwards because you overcapitalized. But for the same 200 grand, you could buy two properties for 150k. You've now got three actual separate titles of properties. Your granny flat isn't going to go up in value,
Yeah.
but your new asset could go up in value, and that's, you know,
Yes.
I think.
Definitely much more limiting just to go with that granny flat rather than the other opportunities.
Shares versus property.
I actually
Oh,
would
they're
love
not
to
even
know
on my
about
list.
this.
I just made it up. Yeah,
Good, that's a good one.
A new one. I was thinking, you know, in between. Shares versus property, right?
Yes.
You got 50 grand, right? You can buy shares, 50 grand of shares. You can buy a property. You can buy 50 grand worth of property cash, or you can use the 50 grand as a deposit and buy a 200 grand property. The shares will go up and down and do their thing.
Is this shares as in stocks? Or
Stocks,
is this like
yeah.
crypto and like, or is this all together when you say shares?
I'll
What
just
is it?
use shares, but we can use crypto as a separate one.
Okay.
So the shares, that you're buying 50 grand of shares, but when you're buying it in property, you can put that as a deposit and buy a 200 grand. So if the market goes up by 10%, which I ain't seen no share market go up by 10%, everything's gone down by 10%. But anyway, let's not talk about that, right?
Too soon.
Too soon for lots of people, right?
Yes.
And I actually put my hand up the other night and I said, whose property went up and doubled, whose property went up by 50%, whose property went up by 20%, and there was hands in the room, right? I ain't asked anyone whose crypto's gone up by anything. Whose crypto's worth what it was worth last year? Whose shares?
Lost everything on crypto.
Whose things, right? And it's like, it's solid. It's not as liquid as that, but it's solid.
Yeah.
And looking at the leverage of it, right? When you're buying a share, you're not getting, you know, a rental, right? You can't go in there renovate it. You can't go and, you know, add value to it. If the CEO of, you know, one of the stock market companies decides to have an affair or something goes wrong with the business, a scandal breaks out, the business turns to shit, you realise it's a Ponzi scheme. I know single-handedly, like you look at any of those shares, like Afterpay or Twitter or fucking Facebook or Google, they're all falling in value, right? And all it takes is for your cash to be dropped from 25 grand to 20 grand or 10 grand.
Yeah.
You know, what happened to Ansett, right? Ansett was a airline back in the day, right?
I'm glad you assumed that I didn't know what that was, because that's
You
correct.
know what it was?
No.
You didn't know?
No.
Answer's like Qantas.
Okay.
What happened to Franklin's? What happened to Golo?
Franklin's Golo, yeah.
What happened to them all, right?
That's true.
These places go under. So, what happens if you have, let's say it goes up by 10%. Let's say you're lucky, right? Your 50 grand turns into 55 grand. If it goes up 10% of your property, that's 200 grand turning into 220, right? You've multiplied your outcome. What happens when the rent goes up, right? Your rent could be 20 grand a year passive income in the next 5 years from just one property. So, crypto, I love going to the pub and playing the pokies and smoking and having a drink and playing the pokies too, right? I don't drink, I don't smoke. I occasionally have a drink, but I can't smoke. I used to smoke 2 packs a day. Did you know that?
I actually heard that in your Charlie
Yeah, I used to
thing,
smoke heaps.
live.
Like, I still crave it. Like, I'm like a full-blown fucking cigarette junkie, right?
Oh my God.
But I'd love one right now, and it's 4 years. But I know that I can't have one. If I had one, I'd want another one. So I just don't have them. So,
Well, everyone's vaping now. Smoke's probably going to
imagine
go
how
out.
bad people are going to be from vaping, right? Well, what are you sucking in air with chemicals for? Like, anyone looked at what's in
Because
those
it tastes
chemicals?
good now.
Well, just fucking get a lolly.
I
right?
know.
Imagine all the
I
people with
know.
like lips missing and
Oh,
stuff in the future.
lips.
You know, like the cigarette pack.
Who knows?
So bad. I'd rather smoke a cigarette. You're not going to see me vape, but I don't smoke.
I'd rather
so.
do none.
Yeah, it's just, it is what it is, right? But you play the pokies,
Yeah.
and it's the luck of the draw, right?
Mhm.
And I see crypto. I love crypto. I like Bitcoin. I like Litecoin. I like Ethereum. I like lots of projects, but I like protocols when it comes to that. I don't like applications. Applications are things that are built on top of the protocols. It's like, do you want to have something you can plug in the PowerPoint, but then you plug it, it'll blow up, right? But the electricity grid is what's important. So I like protocols in crypto, and I'm very invested. I actually sold off a lot of crypto at the start of this year. I didn't want to, because I just didn't want to sell it, and I'm a lazy investor like that. I treated crypto like property, and I wouldn't take the money at the top. And I've seen mates that throw money in. They're like, "Oh, I need some money today. I'll pull it out." And they don't give a shit about the price. And they do very well out of it.
Yeah.
And I had bought like a shitload of properties that I needed to settle, and I bought them all cash, and I had to sell my crypto, and I was upset. I sold Bitcoin at like 70 grand. I'm like, it's not 90 grand. It could go to a million. I look at it now, it's like 25 grand, 20 grand. It's like,
Investor hoarder.
exactly, right? We talked about other assets beforehand, and
Yeah.
like, metals and stuff.
Before we came on here.
Before we came
they
on
weren't
here.
here for that conversation.
No, they weren't here. And I was talking about tons of silver and tons of copper, and it's stored in all different places, the funniest and weirdest and random locations. And I invest in that, but I'm a long-term person. Like, that was here before I was here, right? That's God's creation. It's not it's crypto. And I think crypto is fantastic. Like, I've made wealth out of that. It's like, you put in $1,000 and you get back 200 grand, right? Like, that doesn't happen.
Yeah, that's it.
But knowing that it's, it's a luck of the draw, because there's a stupid market out there, and I love it, right? I'm not dissing it. This is actually being streamed to a crypto channel, right? A lot of people know I've got a crypto channel called B.Decentralized. I haven't posted on it for years. I just do videos and launch them out there because there is a community there, and I love crypto, but I just see that, what do you want the asset to do? And there's a time where I'll be saying to people, hey, I'm like doubling down into crypto, and I don't think it's now, right? I don't think it's now. I think, there's risk there too. So
It does follow the market trend though, doesn't it? But it's just so volatile, because literally Elon Musk couldn't make a Twitter and then change everything in 1 minute or something.
he could, but there's like so many Ponzi schemes that are on top
Yeah,
of Ponzi schemes
there are,
that are in there, right? There's that exchange FTX that went down the other day.
Yes.
And you look at the guy that was behind it, and he looked like he's being placed there as an agent from someone, right? From a certain country that's on the 33rd lateral, right? of the world, of the planet, right? If the world's round, that is. If the world is round, we're not going to go there, right? But if the world was round, on a certain lateral, there's a point, and it looks like an agent has been sent there to do that. It all looks. It's in World Economic Forum, it's climate change, it's all these agendas, and it's like, well, was that deliberately set there? It was a Ponzi scheme. There's lots of Ponzi schemes. We're not going to go there too much, so let's move on to the next one.
We should do another podcast, not podcast, live.
We should do we should do Facebook lives on Be Decentralized that are completely like smash up like a love heart. If you think on the Be Invested, if you would like to see like really off the chain sort of food, health, what's your background? What do you like? You came here to be in the investor relation team. What is your background? What do you do?
So outside of B.Invested, I'm in the very final stages of a naturopath degree. So I'm a naturopath as well outside of here.
Naturopath. So healthy, healthy.
Holistic health, well-being, all of that, and
natural immunity.
Yes, natural immunity. Helping the body to fight itself, and giving it the right tools to do that, and not trying to crush its system down.
And I guess that would go over like nutritionals as well, like
herbal medicine, nutrition, lifestyle, everything, mind, body, soul.
I've never been to the doctor and they say, if you eat, this, you'll be doing that, right? Because they can't give you that. They're in a system to give you a solution because they've been given a set of products to sell.
Yes.
And we have really great chats about, beliefs of, how you should live your life, like healthy wise and stuff. And if you would like to see stuff like, maybe we could do like a full-on naturopath sort of Facebook Live, and
hit the likes.
I will just push
or the hearts,
the love heart.
Even if you don't want to see it, just hit the hearts anyway.
But and we can direct you. There's a Facebook page called Be Decentralized with a S in it. go and like that page, and maybe we could like ramp that up and throw a few odd things out there that people in our community love seeing me go on rants about
A bit.
government and
Yes.
stuff that's like,
We love it.
very controversial. So maybe we could do Facebook lives over there that are away from investing.
Do some health ones.
Health ones,
I'd love to do that.
educational ones,
Mm-hmm.
government ones, financial market ones,
Mm-hmm.
really off the, Richter scale. Because sometimes people think I'm a bit crazy with what I say.
You
And,
are, but it's good. We
I
like
just don't
crazy.
care. I just say it as it is. Like,
Exactly.
I don't mean to offend people. I try to be respectful. Lots of opinions, right? Now, some people say you need a large portfolio of 100 properties, 200 properties.
This is one of my ones that I wrote, actually.
Well, you didn't say it.
Well, okay, I'll say it.
Yeah.
What is the minimum that someone should kind of achieve financial freedom, or a level of financial freedom? I know there's all levels of what, it's all depending on goals as well.
If you want 50 grand, you need 5 properties.
Let's
If
say
you need
100 grand is like a base. I think that's a lot.
5 to 15 properties.
There you go.
50 grand, 3 to 7 properties.
To have a passive income.
To have a passive income of 50 grand a year or 100 grand a year.
Yeah.
Some people say you need to have 50 grand or 100 grand to get into a property, right?
Yeah.
As a deposit, 200 grand, $500,000, $250,000,
I
right?
know.
You need to have money to make money, right?
Yeah.
But you can get into a property for as little as $20,000, and that's
Yes.
a 20% deposit of a 100 grand property. You don't need to have millions of dollars. You don't need to come from great wealth. I think if someone really wants to, get fucking in the trenches and get committed with their goals, like I had 3 people that were at the Christmas party that had told me over the last 24 months that they sold their car. They sold their
that's
fucking
commitment.
car, right?
Yeah.
I drove a $500 fucking Mitsubishi Mirage,
A pink
for
one
six,
at
pink
that.
one, right? A pink one with all the wrap falling off it and the paint's all messy. And I drove that thing for 6 months this year, right? 6 months. I drove that thing for of this year, and it was because I was waiting for new cars to come. But I remember when I sold my car, right? I actually sold my Raptor for 74 grand, and that day I walked in my house and I was
Love
like,
the Raptor.
I've got a settlement happening, right? And I was like, I was in like cleaning my car out, and I literally went down the back paddock of my house. I had to go do something, building a dwelling down the back there for someone, and I drove back and I was in the house pulling out all my stuff, and then I was like, literally by the time I drove down the back of my yard and back, I had someone buy my car, and I was short like 80 grand to settle a pub, right? I was literally short 80K. And the fucking money was there in my account. I settled the pub, right? And, 20 grand is it's a lot of money, but in the same token, it's like not unachievable. Like someone could, people have credit cards for that. People have a car loan.
Yeah.
People have car loans for 100 grand. People have a car loan for 50K. Like a car, go sell your car. I don't know, whatever. Right? 20 grand
Do
is
what it
not.
takes.
It's not. If you say you need 250K, well then, that's a different story, right? Like you're not buying a place for $1 million. So
Yeah.
it all starts with something. I think successful property investors' mindset needs to be, they need to have a plan, they need to have a strategy,
The goal.
they need to have clarity on their goals.
Yes.
We did a webinar on goal setting last week. They need to see that the property, if that's what they're using, there's many vehicles that you can jump in and out of to get there. And I do that very regularly. Like someone in there, I'd see them name me Kane. He always says to me, bro, you're so diversified with what you do, right? Down to the point that I had like 10 cars in my front yard the other day, and like 3 months ago I had no cars. I had a pink fucking car. Now I've got 10 cars in my yard, and like I look at some of them, like I can scrap this for parts. The bull bar's worth $1,000 or $1,500. I paid $1,000 for it, right? And it's like I use that car to remove stuff. I use it literally as a tractor. I use the cars as tractors, right? And but the property is a vehicle.
Yeah.
Like, see it as a vehicle. Don't see it as it's a property. I've got to go and be a good, buy the nice thing or whatever. It's a vehicle. Get it to get you to where you want to be. And understand that numbers don't lie. Like, the numbers are what's important. If the numbers add up, do the deal. If they don't, well, there's your opinion playing tricks on you. So, any other myths that we can think of?
I think we've covered a lot of them.
Okay. Cool. Well,
Does anyone else have any of their own?
I've got lots of questions
Yeah,
in here.
let's
I'm going to go through them. But in the meanwhile, whilst I'm looking through questions for you, tell the community about, say, the top. You've got a little list here of some properties that you've done. Maybe a few properties we've done recently that I've put together for your investors that you look after, and maybe a couple of deals that you're looking at that I've got at the moment that we've wrapped up.
Cool.
So.
I did mention one briefly before, which was so it was a unit. It was 275k purchase price, and this was a Sydney one, by the way, and not like a metro area. Renting in the early 300s, but valuing online 80k over what it was purchased for. So that one right there was one I mentioned earlier with that 80k over. We've also had one recently. It was in Queensland, another unit, 165k, had a rent range of about 330 to 350, the mid 300s, 10% yield, and all the comparables in that area were over 250, 300k. So, people say they don't like units, but, it's hard to say no to a deal like that. So there are a few that we've done recently. There's another one, this one, purchase price 190, renting for 320, giving a 9% yield. And so that was about 100 positive cash flow per week. You have a couple of those, build that up as your foundation. That's, building your acquisition phase right there.
Cool.
We've got a really cool one actually, just at the moment. I love this one, love all of them, but this one's a duplex pair, 3-bed, 2-bath each side, 420k purchase price, renting for 545.
But that 545 is cheap. They should rent out for 320.
Yeah, it was under
each.
rented for
so
sure.
640 a week should get. Yeah.
Which we like as well, because then we can bring them up with the interest rates. And it was only, not that this is relevant or matters, but it's only 3 years old. So, we are looking at new and older properties too. And the single houses, not multiple dwelling houses, but single houses were valued.
Sold. Actually sold, like across the road. Like literally the house opposite it.
Yeah.
This is a duplex pair for how much?
495k, so 75k difference for a single house compared to a duplex pair.
Yeah.
Yeah, that's an awesome one.
Any others?
Yes. We have, this is a block of units, so maybe later on in your phase, if you're an early investor, you could start looking at blocks of units as well. This one is 745k, 30k below asking price, actually, and it's bringing in about 90k cash flow per year net.
That's on the current rent, so I think it should be 25 grand a year positive. That's 4 2-bedroom villas, which are worth about 250k a piece, so it's really worth about $1 million. And the owner paid 780 12 years ago for it. So whilst everyone's sitting there thinking, the markets have gone up and stuff like that, like my investors that are bought in the Gold Coast 10 years ago, they've tripled their money. They can sell out of 1 or 2 of those properties, go buy one of those properties, and just replace the assets over and watch that next wave go up, which is what we're doing with a lot of our other investors that we've been working with, not the new ones that you've been talking about, ones that have been with me for 3 years, 5 years, 8 years, and getting them from the accumulation to the retirement and consolidation phase of their journey.
Cause there are different phases you have to go through.
Yeah. Cool. Well, there's lots of questions coming through. Let's get on to some questions. We've been here for 1.5 hours. Did you think Hannah was so nervous, right?
Oh, guys, my hands were sweating all day. I was freaking out.
It's nothing,
I had tears at some point. It was terrific. But nothing. No, I'm fine. It's fine. It's been good.
You've been great. I think everyone loves you. So,
we'll see about that.
Dave said, "Hey Nathan, what's your thoughts on inflation data in the US coming out last week, lower than the forecast?" Exactly. So I've forgotten actually completely to mention anything of this, but in the US last week they announced data showing that the inflation has turned negative. So it's lower, right? So it's everything's starting to go to a deflationary territory, right? And it's obvious. You take everyone's earning capacity, you take everyone's money away, they've got to pay extra for all these things, they're sucking liquidity out of the market.
Yeah.
People don't have money, so then it's going to cause deflation, which is the first stage of what I was talking about with us going into, we're in a recession, but no one realizes it yet. And if they keep it where it's at, it's going to totally nuke every financial market, every part of the financial market. And 2023, for a lot of people, may be bad. For a lot of people, it's going to be very, very fucking good. And I'm so excited by that, because we're going to see reversal of everything we've seen in 2022. It's like they've destroyed the market in 2022 in a lot of areas. Like, we haven't seen property prices crash. Hannah gets the shits because I wrap up a deal, her client does a deal, and the next minute I'm like, hey, the client's lost the property.
Yes.
Yeah, it happens regularly on the
clients.
daily.
Especially lately, it's just been, it's hot now. Everyone's trying to.
We lost over
Get
20
in it.
last week. 20
Yeah.
properties that we'd secured, sent the contracts back, paid the deposits. Someone's come in and paid more. So,
Oh.
is that one of your clients is on here? We've got Andrea here that says the location, demographic, and area doesn't guarantee a terrible tenant.
Yes.
Get a good property manager that completes a thorough screening process. Some of my best tenants in Mount Druitt. Give us a call if you need a hand with any New South Wales property. So Andrea is on our team. Andrea's story is really cool. I should get Andrea on one day.
Should.
So just a notice,
It is
Andrea.
awesome.
Because Andrea saw me on a podcast maybe 2 years ago, and it changed her mindset of what she was looking at and what she was thinking of, and how she saw property. And she's a very, very valuable asset to our team, and helps out. Like, property management is, you get abused by the tenants, you get abused by the owners, things that don't go right. And I've the love and the care that Andrea gives to all of our investors is very, very. I haven't seen it in property management like that beforehand. So
Me too.
yeah.
Even if you have properties that you haven't purchased through us, that you're not really happy with the property managers, give us a call and we can get you in touch with Blink.
If you own a property we don't buy for you, we manage them still. So reach out to Hannah, reach out to Andrea, and we'll get you the highest rents. That's what we specialise in. Is we're pro landlord. So so many agents are pro tenant, and I set up Blink because I was sick and tired of getting screwed from my property manager. My property manager should be working for me to get me the best result. And I found out that many of them were not, and that's why, like, almost 10 years ago, it's been a rough ride building that business, right? And it's taken us 10 years to nail it right. And
we have a fantastic team. Yeah.
Very good team. Rachel says, I bet you get some of these questions from me, Hannah. Keep up the good job. Josh said, too many people are scared. They need to change their mindset when buying. 100%. Here we go. Love it, Nathan. Waiting on finance. Can you go again?
Yes.
I will be in touch shortly. Nothing is easy. Trust the process and exit the matrix. Exactly. If it was easy, everybody would be doing it. Like you said here, hey Nathan, if your borrowing is tapped out in your personal name, can you open a trust and loan with that entity or the companies? Would that help you borrowing or servicing? You can a little bit. Something that a lot of people don't think, if they can't buy something, you can actually buy in your super fund. So a lot of people don't realize that they can buy in their super fund. So that's one entity which it has non-recourse loans and certain things like that. So it actually doesn't go on your servicing, but there is other ways of being able to get yourself back into servicing. And that can be buying a property outright, using that cash flow to boost your income up. Certain different things. So we can chat.
But also check with multiple brokers, and check with Zinger and get second opinions. Don't just go off one bank and then find out you can't service and then stop there. You got to find all avenues first.
Exactly. Josh said here, impressive, Hannah. Well done to your client. That's so great. Jem says here, Hannah, can you give us an idea of how much this person was earning at the price of the 5 properties that was purchased? We can't disclose personal information like that. But let me just say, it's not a stupid income. Like, it is a very normal income. It's no CEO, not anything like that. It's just a normal income. I think it's a person like a healthcare worker or something.
Yes.
Like
In hospital.
So public servant,
Yes.
Public servant, right? So that makes it cooler, right? And the purchase prices, I think they were between like 100 and 300 grand.
300 was the most.
Yeah, 330 and like 150 or something like that.
Yeah.
So that sort of price range. Kane says, hey Nathan and Hannah, any thoughts on the future government programmable money that can expire, turning on and off within days? Friend told me it is coming.
Yes, I've heard
So,
about this.
as central bank digital currency, China has gone into the digital yuan, which is their dollar over there, and it's turning to a programmable money, which basically, if you're a good boy, good girl, bad boy, bad girl, and that doesn't mean that, hey, we're shooting people and killing them, or robbing people or doing anything bad. It means that simply you didn't agree with the agenda, you didn't agree with something that the system didn't like. They can close you off, lock you up. How many people have used PayPal? Just think about the world we're going into. How many people have used PayPal and been stuck, right? They keep your money in there, lock it up, using eBay, whatever the case may be. Imagine that is your whole life, your house, your job, your car, you can't use anything. That's literally the world we're going into. And I have some pennies and stuff. It's not like just like little bags of pennies, right? It looks like just random.
So random.
Hannah's never sat on my desk here
Not on
before,
this side.
and it's like pennies, right? Something so simple, like if you just go back through history, right? And
I've ever seen a penny.
you've never seen a penny. Here, you can take it home.
Oh my gosh.
So they're the ones.
Souvenir
Yeah, they're
from
the
my
ones.
time.
That's like a kangaroo penny. The other ones
No.
are the earlier pennies have a
For anyone
different
that
front on.
hasn't seen one.
Yeah. So a penny. Google, like this one's a 1950. That one's
1950 as well.
1950, and this one's 1957. You Google what would a penny buy you in 1950, right? It could have got you a loaf of bread. It could have got you whatever, right? But that's when it had value. And I bet you the loaf of bread was much more nutritional value than what it is today, right? And looking at a penny, right? You could trade this, you could do whatever, but now it's just digital. You can't control it. So I think that financial freedom for me is doing what I want, how I want, when I want. And I don't agree on the world and the system that everyone's stuck in. And I think it's important to use it. It's not growing a beard, going out the bush, never being able to, participate in society, eating witchetty grubs. It's knowing that it's a system, and then having a lifestyle that you can either partake in that or not partake in that. And
Work in it.
Exactly.
Work within it that still benefits you.
We saw in the last 2 years people have lots of things that they didn't control in their life, and that in turn meant that they had to make choices that weren't in line with that. And I think it's important to have that control.
Were these at this time was fiat currency backed by gold at this point in time?
Yeah, it was. It was. It was back until 1971. It's 51 years this year since we got taken off the gold standard, and that was a. If you notice that all countries had that happen over that same period of like 5 years or so, and it was like a great reset that they talk about happened back then from robbing everybody, and it's just happening in a digital deja vu, right?
I'm sure
Currencies last. There's been the oldest currency that ever survived, fiat currency, lasted I think about 35 years. We're 51 years in our current. It died in 2008 and got hooked up to life support, feeding it by intravenous stimulus packages. But it's the currencies die. They average about 27 years, right, before they die. We're on over, like we've never had it, and this time it's a global currency. And do you think that there will be more job losses next year? 100% there will be more job losses out there, massive ones across the board, which it's sad, but I'm excited by, because for me, my selfishness means that I get to employ hundreds or thousands of people that I may not have, been able to come across. And if we look at Gemma, it's not bad. Like if we look at Gemma, for example, she talks about openly. She came to us because she lost a job, right? She was in, I don't know, selling energy or something, and she, came to us. She goes, I've got no job. It's either here or I'm going back home to the UK, and I'm sure her life is better than doing what she was doing beforehand, and I'm excited by that. So change, adversity brings change, and
I like this question.
Julie says, how do people assess replacing income type of goals taking future inflation in account? I.e., if I retire today on 50k will be suffice, but my retirement age is in 15 years.
Question.
And that's very good. So I think it's important to have an asset that gets inflated. Like all these property investment companies, I'm very different to any of them, right? I'm different to any of your finance companies. Yes, I've got a rat's tail, and thanks for giving me the plate on there before, Hannah. Um, I have. I don't talk about things, right? Like everyone goes, oh, here's a chart, here's a spreadsheet. And I pull them out too on some of our webinars that people need to register for and all that. But I I look at it, I call it for what it is, right?
Yeah.
The whole system is, it's not your property that's so great. It's that you've had inflation that has dragged the value up because you need more. It's not that you. There was times when a house in Sydney was worth $13,000. My mum paid $13,000 for a property 52 years ago. It's now worth $1.5 million. I keep talking about that house, and every time I talk about it, it just goes up further and further in money, right? If my dad was alive, he wouldn't believe that the house is worth $1.5 million, right? Because they paid 13 grand. It's not that the house has got any better,
Yeah.
it's that you need to go and get more dollars and pay for that same thing. So it's not the value gone up, it's
Yeah.
that the money has lost its value, that you need to have more to do the same thing.
It's relative to inflation.
Correct. So the house or property or whatever is being inflated away, your debt is becoming irrelevant due to inflation, your debt's just becoming easy to pay off, and your rent is being pushed up with inflation as well.
Yeah.
So
No-brainer.
exactly. So that's you want something that's going to go up like that. Jasmine said, can you tell us more about your motel venture? Why did you start buying motels, and has it been a good investment? How do you manage so many motels? How do we answer this one? I'll break it down, answer it as you asked me. I bought the motels because I thought, there's no one out there doing it. I thought it was a great investment because of the bricks and mortar that I'm buying. So I was buying lots of properties out in places like Chinchilla, Gladstone, and stuff like that. I was buying properties for 50 grand a piece that used to sell for 500 grand. I didn't have money to buy at the time. I was doing some other things that I needed to allocate funds to. The property market went crazy. Those things went up to 150, 200 grand. I went to go and buy 20 of them, and I was like, damn, I can't spend $1 million on buying 20 of these things. I only get like 7 of them for my $1 million. And then I went and bought some shops, and I went on to Real Commercial, found some shops and stuff like that. And then I started looking around, and I was like, hang on a second, there's some motels that are cheap. And the value of the key rate was like 50 grand a piece. So each unit was 50 grand. I was like, hang on a second, I'll buy a few of these. And I thought to myself, if I'm going to do this, I used to buy motels and rent them out per the room per week. And I attracted a lot of tenants that weren't good. And you're technically not allowed to run that property as a permanent occupation. So I've got in trouble from councils before for renting things out permanent. So I thought, if I'm going to do this, I've got to run it as a motel, and I need to get it on scale. So I thought I'll buy 10 of them. I've got HR, I've got accounts, I've got marketing, I've got all that. And I thought, well, I've got the infrastructure, I can run these businesses. So, and the other thing is that when you run the businesses, in a motel, you can sell the business off. So I thought, if an average person is doing this and they're doing okay from it, I can run it from a corporate level and have processes, systems, procedures, standard operating procedures, and make it work really well. So I went out to buy 10, and I thought if I could get 10 in 5 years, it'd be good. And I went out and saw the first one that I bought, and I'd already bought 3 or 4, and I went, fuck, this is mad, right? This is amazing, right? I'm buying them, really well priced, and I've got a niche market. The reason why I can buy them is because I have the cash. Other people don't have it. You have to buy these things cash, banks don't lend on them, all those sorts of things. So I've got a very, very niche market there. And I've got the capital behind me because of the foundation properties that I bought. So I bought all the little units and little houses. My first motel I bought was 10 years ago, and it was the one in the Blue Mountains. It's getting renovated at the moment. And at the time, no one could buy it. I paid $1.6 million for it. It's going to be a $20 million asset when I'm finished with it, right? That's the business and the building. And at the time of buying it, I didn't know anything about motels. I had no interest. I was renting them out, $200 a week, 40 units, 8 grand a week, 400 grand a year, 400 grand a year at 1.6. It's good cash flow. But looking at it, no one else could buy that property. I went and raised equity from some of my properties, right? So if you had 10 properties with 100 grand equity, there's $1 million. you wouldn't be able to save that $1 million, but the assets that I had, it's like playing a game of Monopoly. So that's sort of how I started it. And is it easy? Absolutely not. Do I recommend anyone watching this should do it? Absolutely not, because now got to manage staff. You've got to manage housekeeping staff. You've got to manage different markets. You've got to run the business. You've got to manage your softwares, so your booking softwares and stuff like that. Changing. You've got to. There's a lot of things to learn about it. So it is a pain in the ass. But I've got it to a point on scale where I've got dozens of motels, and I've got general manager in place, and I've got a chain of command in there, and we're able to take on, and I've got a goal of getting to 100 of them, and it's just another little thing that I play with, and I've got a vision for that of what I can do with it in the future as a business model, and I just have fun with that. So yeah.
Do you love a challenge?
It's a pain in the ass, right? It's a pain in the ass of a business, and I don't, hide from that. Stephen said, I want to find mortgagee sales. Do I talk to a real estate agent or the banks? Mortgagee sales leave clues, right? So a mortgagee sale would be a 10% deposit, auction, 30-day settlement. There's certain signs that you can see, but you can't just go. They can't advertise that they're mortgagee sales. So you need to identify what a mortgagee sale looks like in your area, and then be able to find them. There's not many people going bank repo on mortgagee, and the reason being is the market is very liquid. So there is a lot of money floating around. No one's going to go broke with paying a 2%, 3%, 4% interest rate on a typical type of property. There's a lot less bank repo sales today than what there was in 2016 and 17, and very few different ones. There's only little periods where there's big boosts in bank repo sales. I get access to that stuff because I deal with the disposal companies, and I've got inside sort of connections and all that sort of stuff. So I do get some properties that are bank repo, but they're not out like they used to be in 2006, 7, 8, and 9. Bank repos were everywhere. There was properties littered by them. You'd always see a white piece of paper, a 4-page of paper with a list of commands on it on the front door of the property or in the front window. So yeah. Brett says, hey guys, roughly how much cash should be in a slush fund? Cash to cover the cost when early investing, life cycle, solicitors, buyer's agent fees, bank fees, upkeep of purchased properties, incidentals, outgoings, etc. Good question. We could break that into two parts. One is the upfront capital. So generally, I say 3%, 4%, in fees. So legal fees, stamp duty is about 3%, depending on the state, and that average 3%. 3% stamp duty, 1% pest building, legal fees, that sort of stuff, bank fees. So say 4% of the purchase price, and then I think everyone should have at least $5,000 as a buffer. If you've got 10 properties and there's $50,000 aside, if you've got 100 properties, does that mean you have $500,000 in the bank? At that point, you start going, okay, well, it might only have $200,000, or depending on your cash flow, depending on what helps you sleep at night, is important. So
important to have a buffer.
Exactly.
That you're comfortable with, and then just work outside of that.
Exactly. We've got a couple of people on here that look like they're mates or relatives.
Thanks, Charlie.
Got Charlie here doing a shout out. Olive leaf. So that's something, olive leaf extract or something for your naturopath. Mally says, always reconsider buying interstate properties due to the change in legislation. Tribunal no longer hearing properties where the owner doesn't reside in the same state. Do you ever look for deals around Melbourne? I do sometimes get stuff in Victoria. I'm not a big fan of Victoria. I think there's a lot more value out there in other locations. I'd rather buy in Sydney than I would in Melbourne, just because I think the value is much better in Sydney for demand of the amount of properties that there is, and the amount of properties and the amount of people that are, and the ability to go and rebuild. So if you drive from Melbourne to Albury, you can just keep driving and adding new housing estates. If you look at Sydney, you've got the Blue Mountains, you've got the basin there that everyone's stuck in. So
you don't have that boundary in Melbourne.
Yeah. Lots of other places. Taylor says here, how good is Hannah? Hannah, you've done awesome. Thanks. On that note, we've been here for almost 2 hours.
Yes.
I'm going to wrap it up there. If you want to get started, if you have any more questions, there's a link in the description. You can click on the link in the description to book a meeting with Hannah to talk about your goals, talk about where we can help you with. Reach out to us. You can call us 1300 367 925 to get Hannah on the phone, or get anyone else in the team on the phone. You can send us a DM in the messages and reach out to us there. Just remembering, on none of our pages do we go and promote cryptocurrencies. Do we tell everyone, hey, send us a Bitcoin, we'll give you a Bitcoin back? There's a lot of scams out there, so be very, very careful with who you're communicating with. Make sure you're coming to our page and you're communicating directly to our page, directly, not via a link in the bottom of the someone that's commented saying that they are us. Charlie just said, hi guys, thank you for the wonderful night on Sunday night. Charlie, thanks for the feedback, and sorry to everybody I didn't get a chance to have good chats of too long of a time.
It was just went so fast and we didn't get a chance to say hi to everyone.
It was literally like a wedding. Not that I've never been married, but it's like everyone's coming up, everyone to talk to, hundreds of people there. It was a really, really awesome night, and I think a lot of people got to communicate with other people in similar journeys. It's rare that you get to find a place that's of a safe space. No one's selling anything. I'm not talking about any deals. I'm not talking about anything there. There's no Amway style, people in the audience, like, it's a safe space. No one's there to, you go to events and it's hard to find that. Literally, we had a hashtag for the night of B.Invested billionaires, because it was over $1 billion worth of wealth that we've created in that room. I calculated the portfolios of the people that attended, and there was over $1 billion worth of assets that have been, just even growth in the assets in that room. And to be able to find people that you can talk to and communicate with that have got the same goals, the same challenges. It isn't easy, buying 10 properties, buying 20 properties. I find it easy. It's like driving a car easy, but it's taken a long while to be able to get here, and we've got a fantastic community. We're only as good as you guys are, and our team. We've got a terrific team, and really humbled by it. So
make sure you get to the next one. If you missed this one, make sure you can get to the next.
If you're not a client, you only get an invite if you are an investor and you are working with us. So if you want to get started, reach out to Hannah.
Give me a call.
She's got lots of clients and cool stories to share with everyone. So thank you guys for watching. Have a great evening. Bye for now.
Thank you.